Happy New Year, everyone. This is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to talk about my investment strategy for 2024. Specifically, I will talk about whether or not there will be another bull market in 2024 and the biggest risk we should look out for in 2024. So before I start, I always like to give you some context first. At the time of making this video, the S&P 500 has almost fully recovered compared to the peak in December 2021. If you have been very bullish on the market, you will have an exceptional year in 2023. All the major stock indices did increase a lot in 2023, mostly because of the Magnificent Seven stocks that contributed most of the gains in 2023. For example, the Nasdaq rose as much as 43%. The S&P 500 rose as much as 25%, and the Dow Jones rose as much as 14% in 2023. The important thing we should understand is this: the S&P 500 is largely dominated by the largest tech companies, especially the Magnificent Seven stocks: Nvidia, Meta, Tesla, Amazon, Google, Microsoft, and Apple. In fact, more than 60% of the S&P 500's gain in 2023 was from the Magnificent Seven stocks. The S&P 500's gain would be much lower if you take out the Magnificent Seven stocks. Also, the Nasdaq 100's gain would be much lower without the Magnificent Seven stocks. On the other hand, if you have been very bearish on the market, you have a horrible year in 2023. For example, you're probably still sitting on the sideline and holding a lot of money in cash, CDS, and money market funds. Or you're still waiting for opportunities to get back into the market. Or worse, you will lose a lot of money if you shorted the market in 2023. Here's the situation right now. Most Wall Street analysts were wrong about the market in 2023. Most Wall Street analysts predicted that there would be a recession or a large market correction in 2023. But of course, we did not have a recession in 2023. Also, many investors missed out on the large bull market in 2023. Now, many investors are fear of missing out, so they're slowly getting back into the equity market, even though stock prices are much higher now. The important question we should ask is this: will it be another bull market in 2024, or will it be a bear market? So to answer this question, I'm going to talk about these topics in this video. First, I will talk about my market outlook for 2024 and the biggest risk we should look out for going forward. Second, I will share with you my investment strategy for 2024. I will talk about how I'm planning to invest going forward. Third, near the end of the video, I will share with you my new stock ranking system that has beaten the S&P 500 since its inception. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing and stock analysis videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become millionaires through investing. Once you become a Patreon member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before sharing with you my investment strategy for 2024, I want to talk about my market outlook for 2024 and the biggest risk we should look out for going forward. At the time of making this video, the market is very bullish. The biggest reason is that the Fed will likely achieve a soft landing in 2024. Second, the market expects that the Fed will cut rates faster and more than expected in 2024. And third, the 10-year US Treasury yield is expected to decrease more going forward. This will increase the prices of all kinds of assets, including stocks, bonds, real estate properties, Bitcoin, and many cryptocurrencies. First, the market expects that the Fed will likely achieve a soft landing in 2024. This means the Fed will be able to bring the US inflation back to the 2% target without causing a recession or increasing the unemployment rate substantially or making the US economy slow down a lot. So this is the Goldilocks scenario. The biggest risk we should look out for is this. Typically, there's a very long delay in how the US monetary policies affect the US economy. It may take 6 months to over 1 year for high interest rates and monetary policy tightening to affect the entire US economy. If the US heads into a recession or has a hard landing in 2024 instead of a soft landing, I think the market will also have a correction, perhaps a very small correction since the US economy is still very strong right now. If there's a recession in 2024, the Fed will likely cut rates earlier than expected. According to the Wall Street Journal, around 48% of economists believe that the US will have a recession over the next 12 months. Personally, I think it's better to ignore all these Wall Street forecasts. Most of their predictions are wrong. I think just be prepared if there's a recession or if there's a large market correction. Always have cash set aside to take advantage of the market when it corrects, just like in 2022. For example, there was a large sell-off of tech stocks back in 2022. Most investors were afraid of buying the dip during that time because they were afraid that the market would drop further. Obviously, that was the best time to buy in if you had a lot of cash because most tech stocks were greatly undervalued during that time. In fact, if you follow my YouTube channel and my Patreon investing blog, you may remember that I told all my members to keep buying the dip every month because most tech stocks were greatly undervalued below their intrinsic values during that time. So here's my prediction for 2024. If I have to make an educated guess, I think it will still be a bull market in 2024 because I believe the US will likely have a soft landing instead of a hard landing. Even if there's a recession in 2024, I think it will be a small one because the US economy is still very strong compared to most other countries. The US unemployment rate is still very low, and US consumers are still spending a lot of money. As long as the US PCE inflation is coming down gradually toward the 2% target, the Fed will start pivoting and lowering interest rates at least 3 times in 2024. Also, I believe the 10-year Treasury yield will continue to drop more throughout 2024 because of the soft landing scenario I talked about earlier, and because the Fed is expected to decrease rates at least 3 times in 2024. Here's the important part. Whenever the 10-year Treasury yield drops, this increases the prices of most assets, including stocks, bonds, real estate properties, and even crypto such as Bitcoin. Here's another catalyst that I think will drive stocks even higher in 2024. At the time of making this video, there are still around 6 trillion of assets in money market funds. Many investors have invested in money market funds because of very high yields at around 5%. But here's the problem. These money market funds' high yields are very short term. These short term high yields should only last about 1 to 2 years. So once the Fed starts cutting rates in 2024, the money market funds yields will also drop. This is my prediction. Once these money market funds yields start to drop, I think many investors will start moving a portion of their money from money market funds back to stocks. I think this will push the S&P 500 even higher in 2024 or even 2025. Of course, I'm assuming that there are no major unexpected macro headwinds in 2024 and 2025. At the time of making this video, the Fed is planning to lower interest rates 3 times in 2024, but the market expects that the Fed will cut interest rates much earlier and have more than 3 rate cuts in 2024. For example, the market expects that the Fed will start lowering rates as early as March 2024. Then, by the end of 2024, the market is betting that the Fed will lower its interest rate to as low as 3.5% to 3.75%. I think the market is being too optimistic here. The market expects that there will be around 6 rate cuts in 2024. In comparison, the Fed is planning to have 3 rate cuts in 2024. Here's the biggest risk we should look out for. Typically, most investors like to buy in and get back into the market only after all the prices have gone up a lot because they are fear of missing out. But this is very risky because most stocks are overvalued here. On the other hand, most investors tend to sell their stocks and switch to bonds or cash or money market funds after the market has dropped a lot because they're afraid that the market will drop even further. This is actually the best time to buy stocks because most stocks are undervalued here. When I invest, I always like to look at this cycle of market emotions. It reminds me to always buy the dip when the market is very pessimistic and depressed, and not FOMO when the market is very excited and euphoric. Right now, I think we're in the excitement and thrill stage. Most tech stocks are overvalued now. I don't think we're at the euphoric stage yet. I will be very worried if we're at the euphoric stage because most stocks and investments will be substantially overvalued. I will consider selling some overvalued stocks to free up cash when we're at the euphoric stage. Here's another trend that indicates when the equity market is near the peak. This is based on what I've seen in the market so far. Typically, when the equity market is near the peak, such as in 2021, you will see many investors also speculate a lot of money on cryptos, such as Bitcoin. At the time making this video, the market is beginning to be very bullish on Bitcoin again. For example, many crypto investors and analysts believe that Bitcoin may reach over $60,000 or even as much as $500,000 in 2024. Just to compare, Bitcoin did recover a lot over the past 1 year. At the time making this video, Bitcoin is around $43,000. Cryptos are by nature very speculative and risky. Many investors bet on cryptos, especially during the peak of the market, because they want to get rich quick or because they believe that cryptos can outperform most investments over the long term. Based on my observation here, I think Bitcoin and the US stock market are positively correlated with each other now. If Bitcoin suddenly increases a lot in 1 year, such as in 2021, I would be very concerned because this suggests that the crypto market and the equity market are likely near the peak. Personally, I would start selling some shares to take the gains in order to have more cash on hand if I think that the crypto market and the stock market are too euphoric. Here's a good way to know when the market is near the peak. Typically, you will know the market is near the peak when you hear that your friends, your colleagues, or the people you know who have never invested before are starting to invest because they are afraid of missing out. The market is near the peak when you see a lot of first-time investors speculating on very risky investments because they don't want to miss out on the bull market. They want to get rich quick. Remember the huge rally in 2020. So what's my investment strategy for 2024? First of all, I think it's important not to FOMO in this market. I will try to use the fear and greed index and wait for large dips. There are always large dips almost every year. I think it's important to always pay yourself first every month. For example, I like to save at least 10% of my income in order to invest every month. My strategy is to keep investing in the best YMO businesses that are undervalued. Then I like to keep buying them when they're undervalued and keep buying them over time. I like to keep holding them for the long term, as long as they are still great businesses, so their values can grow exponentially over time. If you look at this fear and greed index, you can see the market is extremely greedy now. Just a few months ago, the market was very fearful. The market always swings between the emotion of greed and fear every year. The market will eventually be very fearful again. If you check the fear and greed index history, you can see that the market always has large dips almost every year. So I will try my best to wait for these large dips or corrections before buying more stocks going forward. This will not be easy at all. You will need to be very patient to wait for large dips before buying. I always use this intrinsic value spreadsheet to keep track of all the stocks I want to invest in over the long term. If you want this intrinsic value spreadsheet and calculator, you can download it from my Patreon blog. The link is in the video description. Every month, I update these companies' intrinsic values based on their latest earnings and their long-term business prospects. Then, I like to wait for them to drop below their intrinsic values before investing in them. For example, I would like to buy more Apple, Nvidia, Microsoft, Amazon, Adobe, TSMC, Visa, and Alphabet shares. So I like to keep buying these outstanding businesses whenever their stocks are below their intrinsic values. I will stay away from them if they are overvalued. I think it's important not to FOMO in this market. Back in 2022, there was a huge correction after the Fed started hiking interest rates aggressively. Most tech stocks were greatly undervalued during that time. I realized that most of the tech stocks I like were greatly undervalued in 2022, so I took advantage of the market and bought more Microsoft and Alphabet shares during that time. I'll give you an example here. This is one of my personal gold stock portfolios. In many of my videos, I always use this stock portfolio to show you my investing strategy over time. I also have another portfolio that's bigger than this one. The stocks and the investing strategy are almost the same as this portfolio. Here, you can see this portfolio has done very well. This portfolio has outperformed the S&P 500 by a large margin over the years. Many years ago, I started investing in this portfolio with $5,000. Every month, I always save at least 10% of my income and use the savings to invest in the best businesses I can find that are undervalued. For example, I have invested in Apple, Google, Microsoft, Adobe, Amazon, Tesla, Visa, MasterCard, and Nvidia. I bought most of these stocks when they were much more undervalued before. Most of these companies are the market leaders in their sectors. Most of them have very large economic moats, great products and services, great management teams, great long-term prospects, increasing earnings, and increasing free cash flows over time. It's very hard for new competitors to compete with most of these companies. Many of these companies are benefiting a lot from the current AI trend. I like to hold them for the long term as long as they are still great businesses, so their intrinsic values can grow exponentially over time. This strategy has worked very well for me for many years. That's why you see there are several multi-bagger stocks in this portfolio already. Now, this doesn't happen overnight. It does take a long time and patience to grow this portfolio over time. I mentioned this in my previous video. I do sell stocks from time to time. For example, over the past 1 year, I sold some AMD, Tesla, S&P Global Inc., and other stocks. Then I reinvested their gains in other businesses that were more undervalued at that time. Again, this strategy has worked very well for me for many years. Going back to this fear and greed index here, there are always large dips almost every year. If there's a large correction in 2024 or later, I don't mind at all. This is because I always like to buy the dip whenever there's a large market correction. I said this earlier, I bought more stocks during the large sell-off in 2022 because I knew most tech stocks were substantially undervalued during that time. I like to buy the dip whenever the market is full of fear. Going forward, if the market reaches the euphoric stage, I will consider selling some overvalued stocks, so I will have more cash on hand to take advantage of the market when it has these large dips again. History always repeats, the market will eventually be very fearful again. Before ending this video, I want to show you a preview of this stock ranking system. I have been testing this stock ranking system since early 2023. The goal is to create a stock ranking system that can pick the best stocks in the S&P 500 and Nasdaq 100 every month so that you can use it to create your stock portfolio and therefore outperform the market over the long run. Here's how it works. Since early 2023, I started using this stock ranking system to find the best stocks in the S&P 500 and Nasdaq 100. Every quarter, I use it to find the top 15 stocks in the S&P 500 and Nasdaq 100. Now, to test this stock ranking system, I used Investopedia simulated portfolio to invest in the top 15 stocks every quarter. I will rebalance this portfolio once every quarter using the stock ranking system. Again, this is not a real money portfolio. I'm just using this simulated portfolio to test my stock ranking system. I want to know whether this stock ranking system can outperform the S&P 500 by a large margin over time while keeping the risk level and the volatility level very similar to the S&P 500. So here are the results. I started this portfolio on March 2nd, 2023. Since inception, you can see that this simulated portfolio has outperformed the S&P 500 by a very large margin. In fact, you can see all the stocks have made very good gains in 2023. More importantly, the volatility level is very similar to the S&P 500. So when the entire market is down, we can expect this portfolio will also be down similar to the S&P 500. But when the market is up, this portfolio should also recover a lot, similar to the S&P 500. At the time making this video, you can see that this portfolio based on my stock ranking system has outperformed the S&P 500 by a very large margin. I will continue testing this stock ranking system to see if it can outperform the S&P 500 by a large margin over the long term, while keeping the risk level and the volatility level very similar to the S&P 500. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.